The Crypto Markets Update is brought to you by KuCoin, the best place to find the next crypto gem.
Joining us now to discuss the crypto markets is Eric Chen. He's CEO and co-founder at DeFi research and development firm Injective Labs. Welcome, Eric.
Hey, thanks so much for having me.
Glad you're here with us. So, of course, we had this big rally in crypto overnight. What do you make of it? I mean, is this a sort of still kind of not breaking over that 20,000 level, just sort of a rebound from the bad news and just everyone's being like, oh, yeah, well, okay, yeah, we figured inflation is going to be bad, but whatever, 20,000, 19,000 or so is the right price?
Actually, I would say it's a really interesting dynamic because essentially when the CPI number first published in the beginning, the entire market, S&P, the global market pretty much just tanked right away. And that's in line with the previous kind of market movements where they kind of see like a elevated or, a CPI number that was breaking expectation. And with that, the Fed is probably going to introduce another series of rate hikes. So that drop is kind of like a rational reaction to that number being published. However, one of the interesting kind of event that happened following was that the White House kind of had like a very, very positive stance on the CPI numbers, and therefore the market kind of reacted, expecting that there's going to be a much more tapered rate hike as a result. So basically, one man's word kind of changed the entire outlook of the financial markets, crypto and global equity and everything alike.
Yeah, and so I mean, personally, where do you see things going over the next few weeks? I mean, do you think that where do you fall on that?
I don't know. I would say that certainly, like this is one of the few things where like the kind of historical trend has been slightly broken, and maybe like the Federal Reserve kind of acts idiosyncratically from the opinion of the executive branch, and the market sharp reverts. But I would say one thing is that volatility, and especially volatility at this level, is pretty much rent extraction for those who hold like a fundamental value or belief.
All right. Well, at least you're honest, Eric. So you work closely with DeFi, with Injective Protocol, which is a layer one blockchain that operates interoperability across smart contract platforms. So, we have been seeing a lot of hacks. October has become the worst month for crypto hacks, with the 2 weeks left to go. So I wonder, has there been an impact on DeFi from all these exploits?
I would say like we have to be very, very careful in terms of discerning what type of hack it is. There are basically two major events. Number one is a BNB chain hack. The number two is the recent fresh off Mango Markets hack. And Mango Market is actually more of a kind of a risk parameter or protocol design stress test. And Mango Market certainly failed against that stress test for a few more of a expected design choices. Whereas the BNB hack is certainly a misimplementation or basically a very, very fundamental like cryptographic exploit. So I would say that both of them are BNB chain exploit is certainly a lot less expected compared to the Mango Market hack, but it's very important for everyone to kind of understand why the hack happened and to evaluate any type of DeFi protocol or DeFi project that are utilizing and whether they share those kind of optimistic assumptions when it comes to risk management and risk control.
Mm-hmm. And looking at DeFi activity right now, what kind of volumes are you seeing? Are people still interested? What opportunities do you see?
I think like at the current environment, like the rest of the market, the utility and kind of like some of the core benchmarks for traditional DeFi platforms has certainly taper down, especially, a lot of the TVL or a lot of the activity during the bull run was certainly, heavily incentivized by different types of protocol incentive mechanisms, or just by, opportunistic kind of value extraction. So therefore, when all the incentives went down by, along with the market by 50 or 60% plus, then this also means that the incentivized kind of activity is also going down accordingly. But that being said, I've never seen so much development activity. I've never seen so much true fundamental design and also innovation and breakthrough within the space. And I'm really looking forward to, much more kind of real DeFi protocols generating, very sustainable and very realistic yield that can, really earn the broad consumer-based trust.